Hello and welcome to the Wendell Effect. My name is Brandon Wendell. I'll be your host as I guide you through my view of the markets for this week. Just want to remind you before we get started, though, that the Trading Mindset organization is not a registered broker-dealer or investment advisors. None of us are, and we are looking at this information from an educational standpoint. We're not giving any personalized recommendations or telling you to buy, sell, or hold any particular securities. Keep in mind that trading is risky. There's always a possibility of loss, and you can try to minimize the risk, but you can never eliminate the risk altogether. So just keep that in mind. We're also not subject to trading restrictions, and we get a position in security and initiate one at any time. Make sure you stay in touch with me. I'd love to get some feedback from you to make sure that this is useful for you, and if there's any securities you want to focus on in particular, you can also let me know. You can email me at brandonwendell.cmt@gmail.com or hit me up on Twitter at TraderBDove. Make sure you follow me on Twitter as I do a lot of regular posts about the markets as well. So for this week, this schedule is as such. It's going to be a little different. We have the weekly market analysis on the equity index futures as usual. Then we're going to jump into the energy futures. However, we're going to take a little bit of a detour here, and I've been joined by a very special guest. So hopefully you'll enjoy that as well. My special guest will be announced in just a few moments. And then we're going to wrap it up with a little bit of sector analysis. So jumping into the week of the 13th, what's going on in those equity futures? We're going to start off looking at the ES. And the ES obviously was very, very bullish this past week. You see the nice rally up that we had. So it looks like we're not quite out of the bear market yet. We're still making lower highs and lower lows, but the market is gaining some strength. And it'll be interesting to see how much further we retrace. We hit the 50%. Haven't quite gotten to 61.8, but you can see we can still stay under the previous high at that 78.6 and still be in a downtrend here. So dropping down into the daily chart, it looks as though we do have some potential movement upwards. Again, the previous high on the weekly chart is 41.65 that I'd be watching for, right in that area, 41.70 basically. And we've got some targets along the way. We just stalled out on this current impulse up, pretty much at 61.8% of the previous impulse. You see impulse, correction, impulse, and we paused. Well, we lost a little momentum during our pause, even though we did finish the week with bullishness, and you can see that we're dying off a little bit. You know, we should continue to go higher with more momentum. However, we're actually seeing less momentum as we go up. Let's see, did I miss the daily here? Could have sworn I had a daily chart on that. I guess I did skip that. For some reason, I got the 4-hour chart twice. So let's go out to the live market here. I think I still have it up and running as far as my charts. Nope, I don't. So we'll just click on that. And there we are. So we'll go to the ES. I apologize, but I do have the charts available. So here we are on the daily time frame. And on the daily time frame, we really don't have any overhead supply. Again, we've got these previous highs. We're currently in a bullish trend here with higher lows and now higher highs. You can see we even got above 60 on the RSI. So that's kind of the test right there. If you stay below 60, you're bearish. If you can get above 60, then you've got a lot of bullish momentum. And we've changed our trend here on the daily. We're in an uptrend. And our next target is 41.26. And then, of course, actually there's a little bit of supply here that I didn't mark off. That's our next real supply zone, just shy of the prior highs from August at about 42.76 to 43.13. So either we'll pause at some of these Fibonacci extensions or definitely stall out at that supply zone. Anyway, as I was going back to the 4-hour time frame, there we are. You see we lost a little momentum recently, and we might get a little bit of a pullback first before we're able to go higher. Again, we got 41.26 as that next target. Now, this is not really the market that's leading us to the upside anyway. When we take a look to see the comparison chart here, we've got all four of the markets, and we see the Dow is actually our leader to the upside. It was the NASDAQ, but the NASDAQ gave up, and now the Dow is leading all four equity indexes higher. So the Dow will really be the one to tell us when we're going to start turning back down. We talked about this last week as well. Anyway, the NASDAQ is the weakest, and that'll probably be the best opportunity to short, as it's the weakest market and should drop the fastest. As you can see, it hasn't even gotten up to this little cluster of price action, that supply zone right around 50% retracement. So we're much weaker. We've only just barely breached the 38.2% retracement on the NASDAQ weekly chart. And we've got really nothing to hold us down other than this supply, but we saw on the S&P that already broke. Well, going to the NASDAQ daily chart, it looks like we're going to get dragged down a little bit. We do have overhead supply right here that we're coming into just under the 50% retracement of that last weekly impulse. So we're looking at about 11,920 to 12,140 as our next level of supply that we were butting up against. And this will be interesting because we didn't quite get above 60 on the RSI. If we end up hitting that supply zone and we are still below 60 on the RSI or even close below it, that's likely to hold as a good supply zone and it will drag the other indexes back down. So that's kind of a key thing to watch for this week. If we do poke above 60, then we should be able to get through the supply. It won't happen quickly. It'll go slowly through the area, but we should be able to go higher at that point. So keep an eye on the momentum. Looking at the 4-hour time frame, we made new highs in price at the end of the week, but we did it with weaker momentum, which again is a negative divergence, usually leads to a pullback, and that's what I'm expecting to see happen, a pullback before we reach that daily and even the 4-hour supply zone at that 12,100 area. So watch out for that, a little pullback. I don't have any kind of demand on the NASDAQ until the bottom of this move up, so really around 10,900, the drop-based rally at the origin of the move. Not sure we're going to pull back that far, but you could apply some Fibonacci's there to see where the retracement's likely to hit. And if you're interested, we can do that very easily. And we go to the 4-hour time frame. There we are. So what I was talking about is this. Before we go any higher, we might get a pullback again because we have the divergence right here, loss of momentum. Even though prices are moving nicely to the upside, usually leads to a pullback, a retracement. So if I go and bring in my fib retracement, there's our move up, and if we pull back, we may end up bouncing at one of these levels. Just keep an eye out for the momentum to shift, and we start moving back to the upside after that. And one of the things we can also do is, while I'm at it, and you'll see this when we talk to my guests a little bit later, we're going to be talking about Fibonacci's, not just Fibonacci's with the retracements or extensions, but also Fibonacci's as a time sequence. So I can go into right here, we've got trend-based fib time, and there's some other ones, fib time zone, there's other tools we can use, but if we take a look at the most recent move to the upside here on the 4-hour time frame from low to really right here is our high. We started to turn down. I guess we can actually say this was our actual low right there. So that impulse up, we corrected down, we impulse again, and you'll notice that often we get signals as to when, actually I do want to use this one. That's really where the uninterrupted move started. And what it'll do is it'll signal where you could expect turning points. You notice right here at the 1.618, we actually had a big rally immediately following. Right in this area, the 2, we actually stalled out, and guess what it's telling us right now? We're at a real important turning point, potentially, time-wise, where this Fibonacci area, the 2.272, could cause a move back down. And then, of course, right here, wherever that time is, that would be on the 14th, Monday at 6 a.m., so this would be the reopening. When we open on Sunday, this would be maybe a little bit later than 6 a.m., but right around that time, we might find the end of our pullback before we move back up. So it's a nice little tool that we can use to try to time areas for turning, and I'll probably do another chart school video very, very soon as well on Fibonacci's, kind of help us out there. All right, so moving on to the Dow, which is actually our leader to the upside, we are getting an interesting signal here. We've made it all the way up to our weekly supply zone. We talked about this. We saw the bullish candle last week, said that we might continue to move up, and there we are, right into the rally-based drop area of supply, 33,560 to 34,325, and we're not above 60. Okay, for us to break through that supply, we really need enough momentum to carry price, and the momentum indicator, the RSI in this case, above 60. Since we didn't get that, that's suggesting that this supply zone should start to turn prices back down. Well, that means we might get those deeper pullbacks on the NASDAQ, especially because it's a weaker index. Let's jump down to the daily chart, and we're seeing, oh, look at this. As we came into that area of supply on Friday, Friday gave us a very indecisive candle. There was bottom tail, which is bullish pressure, topping tail is the selling pressure, and we've lost momentum. So not only do we have that negative divergence, but we got that indecisive candle telling us, okay, wait for the follow through. If we break the low, which is 33,409, we're likely to get a pretty good pullback, maybe even all the way down to 30,711, which is our next area of demand. If we can break the high of that candle and we get more momentum, then prices will continue to move up. And this, again, the Dow will drag the rest of the indexes with it. But if the Dow breaks that low, 33,409, watch out below, especially on the NASDAQ and the Russell 2000, as they have been some of the weaker indexes. Moving down the 4-hour chart, well, we don't see the weakness really here. You got higher highs on both price and the index, the RSI, the indicator. So we're still seeing bullish momentum, but we just hit a target area, 34,408. That was our first projection off those lows, and we get possibly a little turning point coming up here. So the daily is showing that divergence, and since this was the market leading us up, it may be the one that starts to take us back down. Looking at the Russell, you can see how this is not as strong. We're still stalling out in this little drop-based drop supply from September. That's also weighing down on the S&P. Remember, the Dow went all the way up to this area. But, the Russell looks like it is still pretty weak. We're below 60 and could fall. It all really depends on what happens with that Dow. If the Dow gets weak, everything will likely fall with it. On the daily chart, well, we got a divergence. It's real obvious when you look at it. We got high, higher high in price, high, much lower high on the momentum indicator right there. So that's suggesting that prices are going to turn back to the downside. So keep an eye out for that. Again, we even had selling pressure on that candle, indicating potential movement to the downside. If you end up breaking the low of this candle, that'll be your signal that it's on. And obviously, we'll look at the Dow to let us know when things are likely to go down. And moving into the 4-hour chart on the Russell, let's see, we had the daily chart here. So the 4-hour, we did move up, but again, we're getting that loss of momentum, indicating there's likely to be some sort of a pullback happening in price. So I would expect that this week could be a little choppy, a bit of a pullback after that big rally that we had. Remember, on the Dow, we're at that daily supply, and that's the strong market that was pulling us up, and we're likely to pull back now because of that. Possibly getting ready to continue the overall bearish move. I don't think the Santa Claus rally is going to materialize this month, so keep an eye out. Moving on to the energy markets for the week of November 13th. Number one, we got crude oil, and you can see on the weekly chart, not much going on here. A little choppy as we're trying to make some new highs. We can't quite get into bullish territory, so we're still likely to see more choppiness, but overall a bit bullish. So I would expect to see possibly some new highs being made this week, although again, you got an indecision on this last candle. You see that we closed pretty much in the middle of the range of the candle, which means you had kind of equal buying and selling pressure. And that killed off a lot of the buying pressure that we had going into this week. So it'll be interesting to see if we're able to continue or not, but just watch to see which way we break from this week. Going to the daily chart, we are kind of caught in a range, and you can see it a little better here because you see the top of the range at 94.46. That's been tested multiple times, and we've taken away a lot of the selling pressure that should have driven us down from there, and yet we continue to get stopped every time we run up, or even get stopped shy of that level. As you can see now, for the past 2 moves up, we just stall out. Now, we're not getting bearish because we're not making new lows, but something's got to give. We could continue to drift a bit sideways this week. I don't see us breaking out in either direction really strong. We do have a demand zone here that I forgot to mark on the bottom. It's been tested once, but we'll see if it can test again. Right there, you got rally, base, rally. So if I go to crude oil live chart again, on the daily time frame, let me refresh that. I guess I did it on the 4-hour, but I didn't put it in on the daily. You can see, there it is. Right there's that zone I was just talking about. Rally, base, base, rally. King close hasn't tested. If we do drop, that'll definitely hold us up for this week. So keep an eye out for that. And dropping in a lower time frame here on the 4-hour time frame, we bounced off of this demand zone by going a little bit deeper into the zone. But as we rallied up, you can see we failed to break to a new high, and the bearish pressure is coming in. So this is actually a supply we couldn't even touch. We're already starting to drop. So it looks as though this week crude oil might try to drop down and test that 81.34 and also the daily demand zone a little below that, just about 80.50 or so. So I would look for more shorting opportunities at the beginning of this week at least, and just kind of watch to see what happens as we hit the daily demand zone I mentioned. If we have enough momentum to break through, basically what would happen is this. If we come down to that demand zone at 81 right here, if we're below 40 on the RSI, we'll break through that and continue lower. If we're not, we're staying above 40, then we should bounce off this area, and that would be the reversal of the trend at that point. So I'm thinking we're going to go down to begin with this week. We may end up stalling out around 81 and bouncing up to finish the week kind of flat. So moving on to nat gas, you can see we are in a retracement and kind of hit this little bit of a demand zone here. We had rally, base, rally, bounced off that weekly demand, and we've gone back about 38% before we started continuing to move back down. We are very bearish, so unfortunately for the bulls here, it looks as though we're likely to continue to march downward rather than upside on nat gas. Going into the daily chart, we tried to puncture that area of supply, and we did. We got a little bit above it, but we closed below the 38% retracement, and we never got into bullish territory. So this is suggesting that prices are either going to go sideways, or if we get enough bearish momentum where RSI drops below 40 on the daily chart, expect prices to make new lows. 4-hour chart, this is actually suggesting downward momentum. You can see we went down and tried to rally up, but couldn't get into bullish territory, couldn't even reach the supply zone. It already sold off pretty dramatically. So this is suggesting that prices may open up and continue to move down, initially to 5.57, then eventually down to the low fives. Moving on to gasoline, we tried to rally up, but I don't know if we're going to be able to make it to our next extension point. You can see we stalled out without getting above 60. So we might actually see a continuation to the downside rather than to the upside. So let me go out to the live chart again. And on the weekly here, I've got a few other marks obviously from my lower time frames, but let me clean this up. And you can see we pulled back or rallied into a daily supply zone we haven't looked at yet, but just kind of curious, if we use the Fibonacci's this way, we had a retracement about 50% of the impulse down. Now it looks as though we're getting ready to continue the move back down, and we can project our first target 2.14, second target 1.72 if it gets that bearish. But overall, it looks like that's where we're heading right now, trying to project back down. Going into the daily chart, I was mentioning this already, we hit this daily supply that actually had been tested a couple times. We went a little deeper in the zone, but with a negative divergence where prices made a much higher high, but without the momentum behind it, we collapsed. Now, we're not really bearish on this daily chart because we haven't gone into bearish territory, but if we make a high right here, basically if that candle gets broken to the downside and we don't get above 60, then we will drop very quickly at 2.4 or 2.3590. So basically going into the daily time frame right here, what I'm looking for is this. If you make a lower high and lower low on the next candle, basically Sunday night going into Monday, that daily candle, if this becomes a peak, and that happens if we make lower high and lower low, then we are going to be going to new lows, because that will be a high that was made where the RSI was not above 60. And that's very bearish. So that's what I'm looking at right now. And again, target number one, 2.3590. The other thing that was kind of interesting here on the 4-hour chart, as we kind of bounce off a little demand, I noticed this could be a head and shoulders. You've got a big left shoulder right here. There's your head that hit the daily supply. And then we have our small right shoulder that's forming as we speak. So we may end up breaking through the neckline and that old demand zone that had already been tested at pretty much the same time. So that would be very bearish and push us down. Now you do have one possible target here, right around 2.30, and then you can go to those other daily demand zones I was talking about. Looking at heating oil, we've been pushing up a little bit deeper against this weekly supply. We're losing momentum. So you got to wonder how much more we can take of this, but we're stuck between 3 and 3.8, just back and forth. And this kind of looks like it should be moving back down towards the low area of that range. On the daily chart, not really a double top because the second peak is higher than the first. Normally, double tops, you have a lower second peak. And we also did get higher on the momentum indicator. So this is not suggesting that we're going to collapse here. As a matter of fact, it looks like we could go a little sideways. We may end up trying to move back up towards this next target of 3 point, well, basically 4. I don't know if we're going to get very bullish this week. Everything's kind of pointing down, but we don't have enough momentum to break to new lows. And if we do try to break down, we're definitely going to stall out here. We have rally, base, 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 and rally at about 3.2. Going down to the 4-hour chart, now we're seeing a lot more bearish momentum. You can see we went into bearish territory. We've been making lower highs. If we rally, we're probably going to bounce off this 3.77. I'm thinking we could get stuck moving a bit sideways between that 3.8 and 3.2 level. So watch out for that. Anyway, I mentioned we have a special guest, and I kind of hinted at it a little bit because I was talking about Fibonacci. So I'm going to go ahead and introduce our guest. Her name is Carolyn Boroden. She's also known as the Queen of Fibs. So hopefully you enjoy the video, and I'll be back in just a few. And I'd like to welcome my guest, Carolyn Boroden. So welcome, Carolyn.
Thanks for having me.
I appreciate it. So you want to talk a little bit about how you are involved in the markets currently? What is it that you're doing?
Well, currently, I'm doing two things. I do have a trading room that I work in where I'm setting up, running trade setups basically all day long. And also I'm doing some education with IM Academy. So I'm teaching people how to do what I do.
Great. Okay. And what is it that you're actually doing? Which markets are you focusing on? And what is you're known as the Fibonacci or the Fib Queen. Is that correct?
Well, Queen of Fibs, it had to be changed.
Okay.
Yeah.
So,
well, basically, I follow the S&P and the NASDAQ every single day, and either, futures, but, also do some analysis on the, cash indexes for timing work. But then I'm also doing stocks like, Apple, Tesla, Amazon, and there are quite a few more. But I'll look at probably 30 or 40 different charts a day.
Okay.
Yeah, it's a lot.
Yeah. How'd you get involved with this? How'd you get started?
Well, it wasn't really planned for me to be in this business, but what ended up happening, and I'm going to tell the truth, is I basically quit high school, ran away from home, and then my cousin said, "Hey, I heard you're working 2 jobs on Long Island. I have this job interview for you in New York, and it will pay just as much as those 2 jobs that you're working." And I was like, "Sign me up."
Of course. Yeah.
Yeah.
Definitely would jump into that. All right. So the way you look at the markets, obviously you use Fibonacci primarily, or what is it that you're, kind of a crux of what you're doing?
Yeah, I use Fibonacci primarily, but we'll also use like market triggers. I like to call them as basically price action and maybe moving average crossovers that suggest that the zones that I've set up have value. Okay, so I don't want somebody to just buy against a zone because I say, hey, there's 10 levels here, but I'll tell them if it does hold, you're going to go down to the lower time frame chart, you're going to look for your trigger, and then you take your trade.
Okay, so you're basically using multiple time frame analysis as well to make sure you're honing in on the right opportunities. That's great.
Yeah.
Let's see what else we want to talk about. You said you got started, I guess, in Wall Street originally. Did you have a mentor or somebody you were working with? What was your progress? How did you come to where you are today?
Yeah, I did eventually have a mentor, but that wasn't for a while. But I started literally as a secretary/gopher to the government bond trading room. So initially, I was ordering people's coffee and lunches and, Xeroxing whatever they needed at the Xerox machine. So that was the start. But then they ended up sending me to Chicago when I was 20 years old. And I worked on the Chicago Mercantile Exchange. So from there, that's when I got interested in the technical analysis. I took one of the basic classes from Ken Shaleen and read technical analysis of stock trends. So I started there. And then as far as a mentor, as far as what I do now, I actually didn't meet my mentor, Robert Miner, until after the crash of '87. So after being on the trading floor, it was recommended that I go to this seminar at the Midland Hotel at the time in Chicago. And I was like, no, I lost my job in the crash. And he's like, well, you will learn something that will more than make up for, the price of the seminar. And that ended up becoming very true. So that's where I met Robert Miner. And I was sitting in the audience and he started talking about using Fibonacci on the time axis of the market. And he showed some examples and it was like that light bulb went on. And I was like, oh my God, I've got to look into this. And I literally started doing that work on paper charts with a calculator. Okay, this was before we had the personal computer.
I guess we're kind of spoiled now with everybody.
Yeah, I'm absolutely
online.
Spoiled. Yeah, but that's how
awesome.
I started.
So, I mean, do you think that doing it on paper and seeing the mechanics of how it worked and figuring it out yourself, did that help you a little bit more to understand the markets better rather than a lot of people are just using software nowadays?
Yeah, I think so. I mean, I enjoyed working with the paper charts and then updating them. It's like, okay, here now you have to add the high, low, and close, with your pencil. But what was difficult is that is not as easy to do what I do now. However, I was able to use a proportional divider to at least get some of the retracements on the chart.
Okay.
So, yeah.
So what do you think helped lead you to be able to be more successful in analyzing the charts? Is there any personality traits or anything you did in particular kind of stands out that you identify that, yeah, this is what really helped me?
Well, I mean, I have to say it's going to sound funny, but I'm a Virgo, which is, I'm very detail oriented and very much a perfectionist. And I think that helped me. Okay. But there are also some things that I've done, over the years where I literally started reading books like Think and Grow Rich and The Power of the Subconscious Mind when I was in my teens. Okay. Because, I was a freshly, ran away from home and I'm trying to figure out, how to run my life. And those books were very helpful.
Oh, great. Okay. Yeah. So obviously additional reading away from the markets to work on you as a person.
Yes.
Helps you focus. Okay.
Yes.
And then, just a question I'm always wondering, kind of tied into that. If you could talk to your younger self, is there any kind of advice you give yourself or any kind of ways that you point yourself towards or away from something?
Well, I would just say, hang in there. It's all going to work out, because I ended up having a very rough time in the business after the crash of '87. I mean, before that, it was great. I was on the trading floor and, multiple companies wanted me to work with them. But then after the crash, it was really difficult for me to get a job. And I really didn't get anything decent for a couple of years. So I felt like I was going to possibly leave the business, but I'm thankful that I didn't, because the best was yet to come.
Right.
Yeah.
So now, again, you said you're doing the LEWaveTrader.net and then the IM Academy as well for education in the markets itself. For any kind of a major challenge that you faced? You said you had some difficulty getting the quality employment, I guess, after the crash of '87. Was there any kind of major setback that you were able to personally overcome, and how did you do that?
Well, I mean, I did have some of the issues, around the crash, and I wondered whether I should stay in the business. But I had a more recent challenge where, I was working with a group and I felt like, they were forgetting about me. And then also I felt like I was being taken advantage of. And I was kind of afraid to leave, but I knew that I had to say, no, I'm not going to take this anymore. And that the universe would take care of me after that. And that's exactly what happened, because I finally said, no more, I'm not going to do this. And then the opportunity with IM Academy came up, out of the blue.
That's great. Yeah. When you least expected, the doors open sometimes.
Yeah.
Now, when you talk about Fibonacci's, you do things a little bit differently. I remember I was working with you at a workshop a couple of weeks ago in Dallas, and you mentioned that you not only use retracements, which a lot of people focus on, and extensions as well, but also the time factor. Do you feel that that's something that's very important that people are missing out on?
Oh, yeah. I mean, because there aren't that many people in this industry that use timing on the actual time axis of the market. Like they'll say, oh, yeah, we're timing the market for you, our entries and exits, but they're doing it with price analysis. So this way, we're actually using the time axis, and you can get some very interesting results with it. I think more people should use it.
Okay, so you're getting a little more precise times of to the calendar when the turning points are supposed to be happening and how to take advantage of those, I guess.
Yeah, and then when it matches up with price on top of that, then that's almost the perfect setup.
Right, you got the confluence of all the signals
Yes,
in the
everything.
same point. It's like
Yep.
this is when it's got to happen. Okay, great.
Yeah, at least it's a decision point, because obviously they're not all going to, work, but it becomes a very important decision point, and your risk is clearly defined, when you're wrong. So I think that's more important than anything.
And identifying how much risk you have and being able to
Yes.
manage that risk.
Yes.
Yeah, and that's something that a lot of traders ignore. Of course, they look at the
Yeah.
dollar signs and think, "Oh, that's what I'm going to get." But that's what I'm going to get. But what are you putting up as risk, and are you able to stomach that risk?
Right.
A
Right.
lot of people kind of ignore that, unfortunately. Is there anything else you'd like to add as far as our conversation here? Talk about again with the markets and what you do.
Well, I would say, as far as my day is concerned, now actually I do have somebody to help me now in the trading room. But basically, what I love about this work is that it's a new puzzle every single day. So I never get bored with what I'm doing. If it was the same thing, yeah, I would get bored. But since it's a new puzzle, that's what I love about what I do.
It is true. Absolutely. The market doesn't seem to repeat. It often rhymes, but it's never the same thing 2 days in a row,
Right.
or even the
Right.
hour to hour from time to time. So when you're using your Fibonacci's and you're trading, are you focusing more on intraday opportunities or long term, or a little bit of both?
I would say a little bit of both. Like, I don't want to trade anything without looking at the daily chart first. Okay. I mean, you've got to see where we're at with the bigger picture, and then dial it down to the lower time frame charts. So
okay.
yeah.
The
Yeah. So
majority
I
of your
mean,
analysis. Oh, go ahead. Sorry.
well, I mean, I'm basically setting up both day trade decisions and swing trade decisions.
Yeah, that's what I was going to ask is what is your focus primarily on? Is it obviously no matter what, you're looking at the big picture with the daily, but
Yes.
then are you finding more opportunities intraday or swing, just kind of a mix of everything?
Yeah, I probably have, there's probably 3 or 4 trades that will show up in the stock index futures, but there's probably maybe 1 or 2 on each of the stocks that I look at as far as the intraday stuff. And probably not as many swing trades. You have to get them when they set up. Okay. Or if you miss like the initial entry, there are ways that you can, just set it up or set up a secondary entry so that you don't miss, the whole play.
Okay, great. And another asset that doesn't get a whole lot of attention from time to time is crypto. I don't know if you have any focus on that at all, or have applied the Fibonacci's to that. I know it's a little bit different,
Yes.
But have you had any success, or have you even looked at the crypto sector?
Yes. Yeah. I did start getting some payments in crypto. So I said, oh, I better look at this, So
Make sure you're getting the right money.
Yeah. And it absolutely does work the same way that it has on, whether it's Forex or a stock chart or, futures chart. So yes, I think you can also have success on Bitcoin.
Great. Okay. Before we wrap up, I just want to see if you had any words of wisdom that you'd like to bestow on my watchers, my viewers here, and your viewers as well. Whoever's seeing this, is there anything that you would like to tell them about what you do and about the markets, or anything in general?
Well, I would just say in general that you have to have the right mindset, okay, to make money. Because if you have a belief system that money is the root of all evil, you're probably going to maybe make a little money trading, but then you're going to give it back because you don't believe that, it's a good thing. So I would suggest doing some of the subconscious work, or reading the books like Think and Grow Rich or The Power of the Subconscious Mind. And I think it's extremely helpful. And those who get stuck on, certain issues with trading, to use something like affirmations, or there's this thing called faster EFT that helps you shift your subconscious mind. And you can do it specifically on trading.
Great. Okay. Would you be willing to give out a little bit of detail about some of the specific strategies you work with in the markets and how they work for you?
Sure. They're absolutely not a secret.
Okay.
So there are 3 different types of trade setups that I look for every day. One is called the Fibonacci price cluster. So that's where you have the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So that's one setup that I look for. The second one is what I call a symmetry setup. Now, this, I guess, could also be called a measured move. It's where I'm comparing swings in the same direction. So let's say, for example, you're in an uptrend and typically you get pullbacks of, $10 to $15 before the market resumes the rally. So
Yes.
I'm trying to measure those prior pullbacks to give you an idea of where to get in the direction of the market. So that's the second setup. And the third setup is actually a two-step pattern setup. Now, it's also a Fibonacci price cluster because there will be at least 3 price relationships that come together, but there are specific ratios that I'm looking for within that setup.
So those are specific setups that you, 3, the main ones that you
Right.
follow on a regular basis, pretty much work most time frames. Is there any specific?
Yes.
There's nothing specific as far as assets or time frames that you have to focus on. It works pretty much across the board.
Yeah, pretty much all time frames, but I probably wouldn't go lower than a 5-minute chart.
Okay.
Yeah, I mean, yeah.
Right. Okay. Well, I want to thank you for spending some time with me. And again, we'll go ahead and put up the information for people to get into contact with you. You're busy at ElliotWaveTrader.net and also I Am Academy as well.
Mm-hmm.
So if people have more questions or would like to get a hold of you, that's how they do it. Thank you for your time and spending a little bit of time with us. Appreciate it. And spilling the beans with me, so to speak.
Well, thanks for having me.
Moving on, looking at the markets, I'm going to jump into the sectors now for the week of November 13th. And kicking us off, looking at the last 6 months, we are still seeing that energy is by far the leading sector. We're getting a lot of movement there, 22% for the last 6 months. Looking at the last week, this is looking more like a bullish week, isn't it? You see in the rotation, you've got the consumer services, or communication services, consumer discretionary and technology starting to kick off and lead. So this is normally what you would see at a market bottom getting ready to rally, but I think this is just a bear market rally. And if the markets do start to collapse, you'll see the rotation going back into the safety of energy, staples, and healthcare pretty soon. Anyway, look at the market for this past week. Obviously, very, very bullish with a few exceptions in healthcare. So overall, just a broad market rally. It was a little bit falling off there in Tesla as well. And we'll see if we're going to be able to continue that. So moving along for the individual sectors and those ETFs for the sectors, starting off on the consumer discretionary, you see we did actually hit our target, the 0.618 projection of the preceding impulse. It took a little while. We were choppy. Of course, as soon as we hit it, we retreated all the way back to the top of the channel. Well, if the markets are still bearish, and they look like they are, we're still not in bullish territory, we should be able to turn around and head right back down towards the bottom of that channel. So I expect to see a lot more choppiness this week in the discretionary sector. BKN Booking Holdings was one of the trades we were looking at. Unfortunately, the RSI went above 60 as we were testing that zone, and that's a no-go for shorts. There's too much bullish momentum, and you can see that we did eventually push to the upside after we gapped through the zone. So that trade obviously did not work out. And if we take a look at the communications sector, you can see that I was looking at a shorting opportunity a while back, and it worked out to target 1, but we turned around, unfortunately, never made it to target 2. So we've actually broken supply that we were looking at right here at that 47.90. I was saying there might have been a second chance to get in, but there was just too much bullish momentum. It carried through that area. Although we still haven't gotten above 60, if we do get back up to the origin of the move down and we're above 60, then the zone will break and will continue to rally. If we start to turn around, it's going to have to happen basically Monday and Tuesday. We'll have to get some sort of a bearish formation, and that will continue the move to the downside to target 2. But most likely, if you're still in this trade, you probably will get stopped out if you haven't been stopped out already. This is the technology sector. Technology went on a tear to the upside and actually did break into bullish territory. So this is suggesting we'll at least get to 135 and may be able to carry even higher, as there's really not a good supply zone here. Just a lot of selling pressure originated with the gap down, but no real supply to hold the sector down, and it is pretty bullish. We got a higher low, higher high right now. So we may see a little more continuation to the upside in this sector. In the industrials, also looking very bullish. So this is suggesting that the stock market rally might still have some legs left. And remember, we're looking at the Dow to let us know, and we'll have to look at some of the Dow components to let us know we're likely to turn down. But we are close to our next target here on the industrials at 100.74, so expect a little bit of a stalling there, but the momentum is still strong. if we do stall, it'll be a small pullback before we go higher. Building materials, same story. We are breaking to some new highs, but as we did, we got scared off and couldn't close at those highs, left a little bit of selling pressure, but overall, very, very bullish. So it'll be interesting to see if we end up going below the low of Friday's candle, we could collapse a bit as there's no demand. Maybe a little pause point here at about 76, but there's no real demand on the chart at all. So the building materials or materials could actually collapse very easily. Or if it just picks up the momentum, this was a little breather here. If we break the high of that Friday candle, we just keep going. And we stay long until the market tells us not to, basically. The energy sector is a little bit interesting here. I mentioned I drew out this trend line. It was using that as support. Then when it broke, we were using it as a little bit of resistance. Now we're just hovering on both sides of that channel. But according to this, I drew a little pitchfork. We actually should be, and it's interesting, it contained all the price in that area. We should be continuing to move up, but at a little bit higher rate than we were, and we may end up leaving this trend line behind. If the trend is still very strong, we should do that. However, we have lost momentum, and it's not even close. You can see the highs in price, we're not getting anywhere near that with the momentum. So this is suggesting that we may finally break out of that upward pitchfork channel, and we could resume just going back and forth along that trend line again. So it looks like we might just kind of go down, bounce around 90, go back up, bounce around 94, come back down, bounce off 91. So it looks like a little bit choppy on the energy sector. We'll see. XLP, consumer staples, is set for a little bit of a pullback. We came into this rally-based drop supply, and we got a major divergence here. So there might be some nice shorting opportunities on the consumer staples, especially if the broad market continues to go higher. This is a safe haven play and not needed if the markets are up. Now we got bullish candles, but we still couldn't get the momentum we need to continue. So I'd expect this to pull back at least to about 72.50, if not all the way down to 72. The healthcare sector, XLV, did make its move up to its first target, the projection, but again, we have a divergence where we have prices making new highs, indicator is making lower highs. So that's suggesting we're going to get another pullback here. And we could continue up, but there's really nothing to hold us down to get to this target about 138.96, 139. That's the area of supply. It's the next Fibonacci extension. But with this weakness that we see in momentum, we should get a pullback first before we go higher. XLU is going the opposite direction. We did bounce off weekly demand, but we've had a very anemic move to the upside afterwards. We stalled out at these fib levels first at 23.6, then we rallied, stalled at 38.2, rallied, now we're stalling near 50. We should get a bit of a pullback. If we're going to continue to rally, well, we can. This is supply, though, we just hit, and then mark it off, but you have drop, base, drop. And that's what it hit with the negative divergence, or not divergence, but we're below 60 still. So we should pull back probably to this area right around 66 and then potentially rally higher to the 61.8% target. So wait for a pullback to about 66, then you can look to buy targeting 71. On the financials, we are pushing through. You can see lots of momentum. We should be able to get through this supply zone, no problem. We kind of push to the upper barrier, if you will, of that supply, but we got lots of momentum. If we get a pullback, it'd be very weak before we go much higher. And I don't really have any overhead supply, but there is at 38 a little bit more selling pressure that begins, so keep an eye out for that. And finally, real estate, it actually was really kind of left the point. It was kind of retracing here, if you will. But we're no longer retracing as we got lots of bullish momentum. We can't get below 40 as we move down. We're going above 60 as we move up. So that's suggesting that we're going to continue to push to the upside. We could try to retest 43, 48. I think by the end of the week, we'll probably be around here, 41.26 to 42. So very bullish on this sector still, as it looks like it wants to go up. So one of the trades we were looking at was Welltower. Unfortunately, that broke. You can see with the earnings, when they came out, we had a nice gap to the upside. That put us above 60 on the RSI, so no shorting with the RSI too high. Basically, right there, supply is a lie if the RSI is too high. Say that 3 times fast. Anyway, That kind of kills the trade. When you're above 60 on the RSI, do not short. Too much bullish momentum. We're going to continue going higher, and I'm done with the trade. Really, there could be movement all the way back up to about $79. So if you get a pullback, there would be buying opportunities. But I'd look at the 4-hour chart. Actually, let's do that. If I go to the 4-hour chart, sorry, I'm on the wrong page here, and go to Well Tower. Like I said, if I go down to the 240, and there it is, that would be our entry. So I'm going to change this around a little bit, remove that, and remove this. It looks like Well Tower, as I said, is getting ready to move back up, and the area of demand I would look for if we pull back is right here. This stop loss now would need to move below maybe 66 even. There we go. I'll make one more adjustment on that so we can see the text a little bit better. And we want to take a look to see where our overhead targets are going to be. So now we're looking at a possible pullback and rally. As I said, there's really not much to hold us down. That's on the 4-hour. I'll go to the daily. Yeah, it looks about the same. So again, on the 4-hour, target number 1 is going to be just before we hit this origin of the collapse. You might want to keep an eye out, depending on whether we hit this before we make our entry or after. What I mean by that is if we rally into 72.75 before we get to 67.47, then we'll break right through that. We won't want to use it as a target. But if we don't, if we end up hitting the entry first, there we go. So if we just start falling on Monday to this area, then you're going to use this as target number 1 or somewhere near. So we'll look at about 72.23. Target 2 would be this high. And there you are. So we got 2 targets with our entry for Well Tower. We'll go ahead and keep an eye on that for the next couple of weeks, or maybe however long it takes. This is a 4-hour time frame, and I can go ahead and put this into our ideas there for us. All right, there we go. So now it's all ready for next week. We'll wait for that pullback. So we had a couple other trade ideas we've been following. We'll take a look at those. Microsoft on the daily chart, we were looking for it to pull back, and hopefully you were able to get long, although we did dip below 40, so you might not have gone long, because typically below 40 will not make new highs without a retracement. Well, it did that. Here's the bounce up. You can see it did retrace right here. Notice we're not below 40 on that retracement, and prices made it up to target 1. However, we got to be careful now, because when we moved up to target 1, we can't seem to get into bullish territory here. And if we don't get above 60 like we did here, you see, couldn't get above 60 on the RSI, and prices collapsed. So we might be in for a little bit of a pullback here. Doesn't mean that I necessarily want to jump in again, but just make sure you got your stop losses in case it does pull back, you don't get shaken out. Or you only get taken out, actually, if it is a stop loss and you need to get out before it collapses. So make sure you get your trailing stop up. I would probably put the trailing stop just underneath this candle right here, use some sort of moving average. Skyworks Solutions was also a trade opportunity we were looking at, and unfortunately, as we came into the area of supply, we had too much bullish momentum. That means do not take the short because it's going to go through, and sure enough, it did. Nike is a new one. Look at this, 100%. Unbelievable. Well, this will probably be the 1 year it doesn't work, right? No. Anyway, on November 13th to December 6th, for the last 15 years, nothing but winners if you bought Nike on the basically 13th or 14th when the market reopens. So it looks pretty good. Obviously, we may or may not get that 4.75% rally, but we can look to see what's on our chart. And basically on the 60-minute time frame, I had to go down a little bit to find a good entry spot. We had 97.37 to 98.63 as an area of demand that we could potentially buy on the pullback. Target 1 just before 112.19 and target 2 below 116. You always want to get out before you hit the supply zones. And we got the Home Depot, 80% winning trades for the last 15 years. If you buy on the 13th, holding on to December 6th. And it looks like there might be a little pullback before the rally. So going into Home Depot, basically we're right near an area of supply that should pull us back. We do have earnings coming up, so you may want to wait for the earnings because that could send us down into that demand. That would be perfect, honestly. If we got bad earnings that sent you into demand, normally that blows out all the selling pressure and you get to buy, and the market makers and you make money as all the novices got out too soon. So we got target 1 at 319.50 and target 2 at 343.72. Just waiting for that pullback to our area of demand, but lots of bullish pressure. Looks like it could be a good winner. And Walt Disney is another one. This is actually bearish. You see that it only went up 26% of the time over the last 15 years. So over 70% of the time, we've had a pretty good collapse of about 2% for the next 7 days, from the 13th to the 20th of November. So looking at Disney, if we can rally up, we've got a nice little supply here, just under $100. It's about 99.53 to 101.97 is what I'm looking at for the entry. If we can creep up into that area, and we see the momentum is pretty bearish. So if we get up to that zone and we're below 60 on the RSI, look for the short. Target 1, 85.93. Target 2, 77.49. Anyway, that's what I got for you this week. If you got any questions, please let me know. Hopefully you enjoyed my guest. If you want to find out more about any of that or find out information on individual securities, please feel free to send me an email. You can catch me on Twitter at TraderBDub or email me at brandonwendell.cmt@gmail.com. I look forward to seeing you guys again virtually next week. Until then, trade safe, trade well, and take care, everyone.